Bismillah ar-Rahman ar-Rahim. Ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. Actually, today the subject that I'm going to speak about, it's very difficult to answer the questions, so I'm going to manage it in a way or another to share the opinion with everybody, and we are going to bring some facts from Sharia point of view, from financial point of view, from the regulation point of view, and then we will answer the questions together, inshallah. Is the Islamic finance the answer to the current financial situations? This is a very difficult question to answer, actually. But we will, I believe that, and I trust that at the end of this speech, we will be able to answer or have at least an answer. The foundation of the Islamic finance can be the new global system, yes. After the fall of the capitalism, when the Western government effectively nationalized the troubled companies, without denying the need to solve some relevant issues, such as individual errors and mistakes, and the standardizations of the Sharia standards. We will talk later about these issues. Why? The world was involved in 600 trillion transaction, while the real economy does not exceed $60 trillion. This is not the case with Islamic finance today, which requires access to property rights. And as we see now, most of the international regimes are calling to take advantage of the Islamic finance. How? The Islamic financial industry proved after the global financial crisis that it's the only possible system able to avoid recurrent crises due to the fact that the economy is not based on the interest rate that caused all the crises. We will give a small example at the end, actually, to prove that. Interest rise equal inflation start, banks expand loans, exactly as what happened in the USA, which led to the sale of debt, then the inability of the debtors to pay back. Coming from the point of view of selling debt or selling money when money not there, or selling assets which when assets not there actually cause such crisis. Example, while ago, if we go back to our memories, there was the socialist economy which has fallen and disappeared. And today, the turn of the capitalist economy, if continue maintaining the same system as before. And today is a turn of capitalist economy, which is the same end due to the nationalization adopted by these regimes as the sole solution for today. Everybody asking about the support of governments to help us going out of this crisis today. Innovations required. The rise and acceptance of Islamic finance can be counted among the most significant innovations the financial industry was witnessed. A lot has been accomplished by innovatively addressing the financial needs of the customers within the framework of the underlying tenets of religious faith. What are the challenges and opportunity going forward? The pillar of Islamic finance. Actually, to be able to explain, I don't know the background that you are coming from, but I'm coming from Islamic banking background, so I will try to be use the simplicity actually while explaining because we want to know the source of the Islamic finance, where it comes from. So there is a basic pillars, and there is the pillar itself of the Islamic finance. Let's discuss quickly the pillars of the Islamic finance. Islamic finance is an outcome of the need to extend the tenets of religious faith to economic activity in such a way that benefits are evenly shared among all the stakeholders and the economy as a whole. Some of the other underlying features of the Islamic finance industry include time due of money, which is a very important issue for Sharia scholars. Under Islamic finance, time due of money is not recognized and not acceptable by Sharia scholars, or not acceptable under the Islamic principles. i.e., once the sale price is fixed for financing, the institutions cannot claim more than the fixed price. The dues to the institutions, once fixed, remain fixed. Somebody can challenge me how Islamic finance or Islamic banking make money. We will talk about this later. Number two, asset-backed. Typically, all Islamic structures have an underlying assets backing the deal. As such, financing under Islamic structure has the propensity to control inflations. Number three, means and end. Though profitability can be stated as a common end for both Islamic and conventional financial institutions, the Islamic institutions carefully structure and adhere to procedures and process steps means to ensure that the profit earned are in the line with the Sharia standard or Sharia prescriptions. Number three, process orientation. Each of the financing structure is composed of process and tasks. Even if a transaction was to be fulfilled by missing one task, the transaction will be rendered invalid in the eyes of the Sharia scholars. Process orientation, continue. For example, in a murabha transaction, the institutions is permitted to earn profit only as a reward for a risk undertaking and not due to money at time of the time due to the time itself or time or the tenor of the transaction, as evidenced by the institutions taking prior possessions of the assets. If the institutions didn't have the prior possessions and hence the risk of distractions, the transaction will be invalid from Sharia point of view. The basic pillars of Islamic finance. This is one of the most important to know. As Muslims, we know well about this. But as Western, we should explain it always. Why Islamic finance coming from? It's not coming from the air. It's not coming from human beings. It's coming from our principles, the Islamic principle itself. So the basic of Sharia, number one, Sharia Islamic law forms the basis of the framework of the Islamic finance. The Sharia is derived from 5 sources. Number one, the Holy Quran. Number two, the Sunnah of the Holy Prophet Muhammad sallallahu alayhi wa sallam. Ijma' al-Ummah consists among the jurists, qiyas, analogy, and ijtihad, reasoning. School of thought. Behind all this, the 4 of this, there is a school of thought in the Islamic, coming with the Islamic, or explain or prepare the interpretations of the Islamic principles. Over time, various schools of thought have shaped and lead to the development of the Islamic finance. The popular schools are Al-Hanafiya, Al-Malki, Shafi'i, and Al-Hanbali. basic of Sharia, the basis of Sharia, sorry, this has been repeated again, school of thought, yep. Prohibitions, the following are specifically prohibited in the Islamic finance, which is the riba, which is equal the interest, gharar, equal uncertainty or means uncertainty, maisir means gambling, and dealing in unlawful goods or services. Islamic institutions structure their product and processes to ensure total compliance with Sharia principle. Number 4, the basic Islamic finance structure contains of the musharaka, which is equal to a joint venture, unconventional. Musharaka today, for the last 35 years or 40 years, used in the asset side of the Islamic banking or Islamic financial institutions, but it can be used also in the liability side. Mudaraba, it's uses in both asset side and liability side. Murabaha, ijara, which is leasing. Istisna, finance any constructions. Salam, finance the agriculture. How to progress? The players for the Islamic finance market can be viewed in 3 categories today. Islamic banks, commercial banks with an Islamic finance wings or subsidiaries, commercial banks evaluating an entry into Islamic finance. The challenges and opportunity facing each of these categories of the institutions will be different, given different point of departure, where they are, and points of arrival, where they want to be. Some of the possible areas that need greater focus from Islamic banks' perspective are discussed below at the level of external and internal. External to institutions, gross market and scope of service, the standardization, a fine balance. I will explain it more, a little bit more. Fee service and transaction banking, benchmarking. So if I would like to give an example of the standardizations, for example, and the fine balance that we should achieve in the Islamic finance, we are going to talk about the structure of an institutions in the hands of the Sharia board. We are facing a problem in Islamic banking. We are facing the problem that we have to comply with a regulatory body and with our Sharia board. We have to take, in any transaction we are conducting, we have to have the permission of the Sharia board and the permission or to be within the regulatory framework of the regulators. To have the balance, because from place to place and from institution to institutions, we have different opinion, different fatwa on the Islamic transactions till today. So we would like to standardize our Sharia fatwa to be able to conduct our business in a way or another in a similar way. Regulators, from country to country, we have a different regulator point of view, a different regulator instructions, a different Islamic banking law, which make us confused and stop us and give us a difficulty while thinking about expanding our business out of our countries. Internal to institutions, I would like to leave the presentation till here, and then I will come back to the presentation. But I would like to discuss a few issues with everybody here. Based on my experience on conducting business in many areas and many regions, starting from GCC, Europe, especially UK, France, Germany, in Asian countries like Japan, Malaysia, Indonesia. We faced a lot of problems, a lot of questions has been raised and not yet solved till today. Comparing a 35 years of financial industry, Islamic financial industry, with more than 450 years conventional, it's not fair comparison today. Sharia scholars, we have two schools of Sharia scholars today. We have the liberal, which is coming from Asia country, and the conservative Sharia scholars or schools in our region here. Even in our region, in GCC especially, we have different schools within the GCC countries. Islamic banking law still need a lot of enhancement and not represent exactly what's the real needs of the Islamic finance industry. Monetary policy, not clear and not treat the special cases or special needs of the Islamic finance and Islamic banking. Basel II or Basel I and Basel II, there is a lot of thought behind this. There is a lot of different opinions about the alpha, which is the risk weight should be given to the source of fund coming from the depositors, the investment account holders in the Islamic banks. We see it in Malaysia, the alpha, the risk weight of the assets sourced by or financed by an investment account holder weighted at 30%. In Bahrain, it's rated at 30%. In Kuwait, rated at 50%. In some other countries, it's between 70% to 100%. So there is no equality, no equal basis, even in Basel II and implementing Basel II. Basel II didn't take in considerations the special needs and special characteristics of the Islamic banking. So, as a member of Islamic Financial Service Board in Malaysia, we Islamized the Basel II for Islamic banks, but we recommended the alpha for regulators in each country to decide as a separate decisions for them. From regulation point of view also, there is no clear rights for the investment account holders. Depositors in Islamic banks different than depositors in conventional banks. Until today, I can't challenge anybody that there is a clear instruction or regulations or policy force the Islamic banks to announce about the basis of calculation of the investment account holder share profit or profit sharing. Nothing today, no standards, no accounting standards, no Sharia standards, nothing force the Islamic banks, no commercial law. Corporate governors. In Islamic banks, you are under the burden of two things, that you have to comply with the regulations. So if you want to implement, for example, a corporate governance concept or structure in your organization today, it's a very important issue today, you cannot see in Islamic banks that you have to comply also with the Sharia while implementing the corporate governance. So the corporate governance structure differ from Islamic banks to non-Islamic banks or to conventional banks. From operational aspects, we are suffering from a lot. The first, risk management in Islamic banks, accounting standard, because till today we are implementing the IFRS and the International Accounting Standard. IOFI not yet ready to be implemented fully and to serve the needs of the Islamic banks. Sharia standard not yet completed or in a fine balance. Islamic finance contracts differ from institutions to institutions, from country to country. Islamic finance pricing, which is one of the hot issues for the last few years in Islamic banks. Islamic finance pricing, most of the Islamic banks today using the fixed rate while pricing their finance, Islamic finance to others. Human resources and manpower and skilled people. We need a lot of efforts to train people and to prepare a new generations to be able to continue improving on this industry. Information system, information technology, core banking solutions. No one single core banking solutions today in the market can cover all the needs of the Islamic banks. We need to be honest, more honest, in doing this and managing this industry. I believe after all these points has been discussed, we can continue our presentation to talk about the internal to institutions, product configurations and process orchestrations, corporate governance, greater operational risk, because Islamic banks should, when making any finance transaction, should own the assets first and then to sell it. Cost management, this is the process, the long process in conducting any Islamic finance transaction, bear a lot of cost actually and need more cost. Know your customers. E-documentations, because of the volume, huge volume of documentation while conducting Islamic finance transaction. Credit risk and scoring model in the Islamic banks. Let's talk more pessimistic. Superior growth in the economics. With all these problems has been mentioned, it's an amazing growth in this industry. You cannot believe what you are going to see today. Islamic finance represents 1% of the global assets today. Half of the 1.54 billion, it's almost 1.5 billion Muslims worldwide would opt for Islamic finance if given a competitive alternative to conventional services. The market has been growing at over 30% annually since 2000 and is set for continued strong growth, even in during the financial crisis. At the end of 2007, Islamic finance totaled 660 billion of assets and 53 billion of revenues. Islamic finance profit pools total 15 billion and will increase more than twofold to 32 billion over the next 5 years. We estimate that by 2012, Islamic assets will increase to 1,600 billion US dollars, because based on a recent research, Islamic finance industry or total Islamic assets has been reached almost 1 trillion US dollar. With revenues of 120 billion US dollars, interest has spread beyond the Islamic countries, and leading financial centers like London and are pushing to position themselves as major Islamic finance hubs. One of the funny things that it was for me more easy to establish a wholesale Islamic bank in UK more than to establish an Islamic bank in our countries here, because it was easy for them to accept our product sheet analysis for all our products will be offered within the Islamic bank itself. The tax department accepted our accounting treatment to avoid tax duplications. And the contract has been accepted from legal, and it was a very smooth process actually to establish an Islamic bank, more than what we are facing here. One of the things I'd like to mention here, we was studying the needs of Islamic finance in some countries, and one of the countries, which is Australia, we found that the commercial law there 100% matched with the Islamic banking law. with no need to adjust or to amend anything in their commercial law. But still here, we need a lot of improvements in our commercial laws. Islamic finance is a very attractive market with a superior growth and profitability. It has been experiencing stellar assets growth of 30% since the beginning of the decade. The revenues growth has been running ahead of assets growth with a CAGR of 44% over the past 5 years. This is a comparison between or something to show the growth in assets and the growth in the revenues in the Islamic financial industry from 2003 till the 2007, and then the estimated growth rate from 2007 to 2012, and the same for the revenues. Is the Islamic finance the answer to the current financial institutions? The answer can be yes, if we are very optimistic and really ready to improve and to reform Islamic industry, the Islamic financial industry today, and to grab the chances and the opportunity to position ourselves to be the coming solutions for the financial market. If not, the answer can be no. So this is all I have, and I hope that I make it simple and easy and quick within the time. Thank you very much. Assalamu alaikum wa rahmatullah. Any questions, please?
Mr. Ahmed, thank you for your presentation. I have 2 points here. You have just mentioned that the Islamic finance, according to Islamic finance, the cost of funding is fixed. Once it is fixed by the bank, it is not changing. This is in theory, but in practice, I have seen some financing that it is changing, at least for Sukuk. It is fluctuating according to LIBOR. So I need you to elaborate on this. This is the first point. The second one is the risk. I think Islamic finance should be doing better than it is doing now due to a lower risk. As you know, most of the Islamic finance deposits is a free risk. The bank is not obliged to pay them back if they lose them. There is no obligation to pay profit or interest unless it is made. In addition, it is not considered a liability by the meaning of liability, so they don't have first claim on the assets. Thank you.
Okay. The type of transaction will lead to the type of the pricing model that you are going to use. For example, if you are using today, if you are financing a goods, selling goods, for example, consumer finance, personal loans through selling goods or buying goods, it will be a fixed rate, for sure. But if you are talking about the concept of sukuk, sukuk can use the variable rates. And this will be very important to maintain or to avoid any volatility in future, and in the same time to maintain a good cash flow, because the problem today in Islamic banks and conventional banks that the source of funding is very short term, in a very short term. So to go through a concept of sukuk, a long-term finance for 4 years, 5 years, whatever, or a revolving sukuk, for example, in a type of musharaka sukuk or leasing sukuk or murabha facilities, you need to maintain a cash inflow to be able to serve, it's a kind of serving the debt. So to do that, you have to maintain the floating rate, which is you are talking about LIBOR plus. Means you are using the floating rate which is acceptable, not a fixed rate. When you fix the price, it's a different in a murabha transaction or a commodity transaction, that you have to buy the assets itself and then to sell it back. Once you sell it, it became a debt. So you cannot sell the debt and you cannot revolve or rule over the debt itself. This is the answer of the question number one. Question number two, you are talking about low risk in Islamic banks, which is not correct statements. As I mentioned before, Islamic banks under the burden of two things or many things: Sharia, permissions, and regulatory, and taking the risk of buying assets and sell it back. And in the leasing or ijara product, for example, the risk remain with the Islamic bank. The risk will not be transferred to the borrowers under the ijara transaction concept, for example. So once the risk remain with you for the whole life of the transaction, means you are maintaining a higher risk than the conventional, because conventional only give you a money and they don't care about what you are going to do. But at the end, if I'm giving you a finance transaction through ijara product, I will continue with you having the risk for the life of the debt itself. So I hope this is enough answer for you.
Thank you. No, I think just the point with risk. As you know, most of the banks are highly leveraged. 90% or more are depositor funds, including Islamic banks. So yes, maybe with ijara or other tools, Islamic banks take the risk, but again, those funds the depositor funds are not guaranteed by any kind of means that you pay them back. Most of the Islamic transactions are murabahat and musharakat and so ever. That means the bank is not liable to pay them back.
I will answer this also. Again, I have a different point of view on this issue. I will explain it for you. I'm a banker. I'm coming from Islamic bank. This is not true today, because the problem when you have an excess funds in your liability side in Islamic banks and you don't have the placement power with others in your industry, since today it's prohibited by our Sharia scholars to place our money with conventional banks, not like before. 2 months ago, we received a new fatwa that it's prohibited to place fund with conventional banks. But we can accept. So in today's positions, where we will gonna to use these funds for, I have to maintain many limits by the regulators. We have a lot of restrictions, LDR, loan to deposit ratios. I have to find a short-term assets to be able to manage my liquidity between asset and liability. I have to maintain the practice defined by central banks or regulatory body to maintain our liquidity gaps. Today, the monetary policy, as I mentioned before, and the central banks regulations not fit the needs of the Islamic banks. So the same policy implemented on the conventional bank today, implemented on Islamic banks. So from where I will achieve an income on these excess funds? Before, we used to place it even at 0 basis point with conventional banks to avoid any Sharia concern on gaining any such money. But today, even central banks, they are not helping Islamic banks to manage their liquidity. They don't have the Islamic tools. When I deposit our money or liquidity, part of our liquidity was Islamic, it was central banks. What do you expect it to have from Islamic bank, for central bank? Interest? Do I am allowed by Sharia? Do the Sharia scholars will permit us to keep some of this money as a profit? So we have, yes, an excess deposits, yes, but we don't have the resources to use it. And I cannot expand without any plan and put our money everywhere with anybody with a cheap fund. No, it's very costly. Very costly today to have a manpower, skilled people in Islamic finance. Very costly today to expand while you are in 2009 and others, they started their operation in 60 and 100 years ago. You know how much it cost us to open one branch today? So it cost us a lot, believe me.